Good morning, all. Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing key stocks and sectors that one should be focusing on. After a range bound session on Monday, we saw another range bound session yesterday for Nifty, and index traded in a 60-point range for the entire day, which is the smallest range for the index since past 3 weeks, so since 5th of September 2023. So if we observe the trading pattern for the index, there's a lot of volatility along with selling pressure visible at higher levels, and with stocks like Reliance, HDFC Bank not showing any signs of rebound, it's getting a bit difficult for Nifty to make its move on the way up. Even Bank Nifty traded in a tight range of 0.4% for the entire session. Now, the main reasons for this is the dollar index sustaining at higher levels, and along with that, the crude prices also not showing any signs of weakening or cooling off. Now, sector wise, if we see, decent momentum was built up in cement names such as Ramco Cement, Dalmia Bharat, Grasim yesterday, and along with that, even Bajaj Twins saw some excellent momentum build up, and we expect this to continue for the next few sessions. So FMCG stocks such as Nestle, Kolpal, and Marico also saw some good buying interest yesterday, and apart from that, names such as ONGC, Federal Bank, Dixon, Indus Towers saw some good build up on the long side. Now, coming to index levels, there's not much change compared to Tuesday's levels, and however, with Gift Nifty 50 odd points lower, index will open somewhere around 19620 levels, and thereafter the key support lies around 19570 19580 zone, where the 50 DMA is placed, and this zone has been offering good support in the last few sessions. However, if 19570 is breached, index can extend its fall up to 19510 19480 levels. On the upside, key levels for Nifty is the 20 EMA, which is at 19750, which continues to act as a hurdle. And since Friday, index has been sustaining below this zone, and all rises are met with selling pressure. So what we feel is that 19750 now becomes the all important level. Only if indices cross above that, then short covering could be witnessed up to 19830 19880 on the upside. Now, with expiry approaching and highest put writing visible in 19600 as well as 19500 puts, key support zone now lies around 19570 as we've just discussed, and below that 19500. Highest call writing is visible in 19700 as well as 19800 strikes, implying immediate resistance at 19750 followed by 19830. So the overall range for the markets for the next couple of days could be 19510 on the downside and 19750 on the upside. Now, coming to Bank Nifty, key support for the Bank Nifty lies at 44300 44350 zone, where there is a support derived from the rising trend line, as well as the highest put writing is visible in 44500 strikes. In case we see a breach of this zone of 44300, the next key supports that could get tested is 44050 and 43900, and this is exactly the zone from where the rally had started in August end. Now, while key hurdle could be 44,900, 45,000 on the upside, where the 20-day exponential moving average is placed, and sustaining above this, only we could see a bigger short covering move up to 45,500. Also, looking at the open interest data, highest put writing is visible in 44,500 strikes as well as 44,000 strikes, and call writing is visible in 44,800 and 45,000 strikes. This implies a trading range of 44,000, 44,100 on the downside and 44,800, 45,000 on the upside. And extremely critical for the trend for Bank Nifty is the momentum, is the way the trend in HDFC Bank and ICICI Bank would shape up. So that should be on everyone's radar for the next few days. Now, if we observe the FII data, FIIs have been net sellers to the tune of 693 crores in cash segment, while DIIs have supported the markets, turning buyers to the tune of 714 crores. FII's long short ratio for index futures has dipped to 49%, and this is a negative, friends. Also, if we just see the index futures, FIIs have sold index futures to the tune of almost 3475 contracts. They've sold stock futures closer to 18,125 contracts. They've on options front, FIIs have sold 43,844 contracts of index calls, and they've also sold roughly around 2850 contracts of index puts. Now, going into the expiry week, looking at the overall FII data in the derivatives segment in the last 5-7 sessions, today's data it seems negative and seems like a scenario where FIIs are booking their long positions at higher levels. So now to summarize, we expect the indices to witness support around 19,570 levels followed by 19,500, and the resistance would be witnessed at 19,750 followed by 19,830 levels. For the Bank Nifty spot, the initial key supports would be around 44,300 followed by 44,000, and the resistance would be around 44,800 followed by 45,150. So friends, that's all for today. Thank you all for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.